The number of battery manufacturers that are now trying to do it in battery plants that are in the US has continued to expand. All its tens or hundreds of thousands of jobs, plus billions of dollars in investment that were all catalyzed by 7 years of certainty under the IRA. So what the recent bill has done, pulling it all back and unwinding that, creates a lot of concern.
We are live, ladies and gentlemen. Welcome to yet another episode of the Soliverse Podcast. Today I'm joined by Tom Bitting from Advantage Capital. It's a very special episode talking about the financing side of things. Tom, welcome to the show.
Thank you very much for having me, Peter.
Glad to have you here. So Tom, I have a curveball for you right off the bat. If you had 100 million in the bank today, where would you invest it and why?
Where would I invest 100 million? I feel like the answer has to be something along the lines of my industry, right? Thinking about the energy industry and frankly, sustainability. So keeping the focus there rather than bigger picture, the whole universe. I really think that over the next 5-10 years, battery development and deployment is going to be massive. And that from an immediate bang for your buck, I think that is going to be just huge. So that would be a big place to spend my time and money. So, give me a little more time and some more thought. Maybe I'll come up with a different answer, but that's the immediate one that I think has immediate deployability, dispatchability, and construction readiness to be able to jump in quickly.
It's a correct answer. If you look at the grand scheme of things, the macro environment as well. I was just reading the latest data and we, at least on the European side, we will need to 10x the battery capacity on the utility scale and also the commercial and industrial side. So that's definitely a good place to be. And, that's within a 10-year horizons. Before we dive into the deep end, can you tell us a little bit more about Advantage Cap, how you ended up here and how did you actually end up in financing renewables and also solar?
Absolutely. So I'll start with Advantage Capital. So Advantage has been an impact investor for the past 33 years. We got our start in state level tax credits, trying to bring job creation into underserved states in the early 90s. And even today, the vast majority of institutional capital goes to the coasts, New York, California, where the major hubs are. A lot of the Midwest was underserved from a capital perspective. And so our firm was founded to take advantage of and utilize a tax credit program in Louisiana to help bring jobs to the state of Louisiana. Fast forwarding over the next 10 years, program was expanded by a number of other Midwestern states. And Advantage really found its niche, and that was finding good businesses in underserved areas and helping create jobs in those areas and really create economic development by virtue of bringing jobs into areas. And we did that for the first, call it 20 years of existence. It started as state level programs. We dove into federal new markets program when it came out around the turn of the century and have been one of the largest players in that field. And that's really been our DNA, is to help bring that capital to underserved areas. Fast forward to 2016, I had joined in 2013. So I had a few years under my belt at Advantage and was really ingrained and understood and valued the mission. 2016 rolls around and the investment tax credit for solar projects had just been extended for 5 years. And one of my colleagues had the idea this could be a really nice product for us to offer to our investors as well. For the last 20 years, Advantage had been almost exclusively focused on job creation impact. And the year prior in 2015, we launched an affordable housing group to help tackle the affordable housing shortage in the US. And so 2016 rolls around. Now we've got a longer period for investment tax credits for renewables. And it seemed like a great product to add. So we're continuing to expand our impact footprint. First job creation, then affordable housing, and now environmental impact. And so I dove headfirst into that. It was 25% of my time for about 3 months, and I have never looked back. It's been a phenomenal growth sector. The industry is growing. It's not yet fully sustainable, but adoption has been robust. So that's the Advantage background of how we got here. Just very quickly for myself, I started my career in commercial banking. I started out at one of the bigger banks, did that for a little bit, and then moved to a regional bank in the St. Louis area and was focused on helping small businesses support their capital needs. So looking at a lot of companies and bringing capital to bear predominantly on the credit side, so that the transition from that into Advantage's platform was very seamless. I never had any expectations of going to renewables, but the chips fell where they did, and we saw the opportunity back in 2016 and just had to jump on it.
It's actually a quite full circle type of journey, right? So you were on the, let's call it the bad side. Nobody really likes the bankers, right? And then you actually dug into on the job creation side and also ended up in renewables. Back in the day, how easy or how hard was it to build a business case for anything that's either an impact type of investment or even renewables, right? Because as we can appreciate, the curve and the scaling has been tremendous in the last 10 years. We really saw the whole renewable side of things picking up, and now it's actually quite viable commercially as well. And quite frankly, it's a good business case.
It really is. And I think the answer to that question is a little bit different for myself and Advantage than it is for a lot of other institutions. Advantage has always been at the intersection of where public policy meets private capital and Main Street activity, where there will always be in this country sections of the economy, the country, geographic, whatever it may be, that are underserved from a capital perspective or otherwise. And then there's going to be public policy goals to try and fill those gaps, and Advantage is at that intersection. So for us, looking at renewables, which in 2015, 2016, were really starting to pick up steam, but not fully, mainstream at the time. Jumping into that was a very easy transition because of the impact case, the use case for the grid. Even corporates were starting to get in on it. And we also were seeing local communities seeing the value creation from those projects. And so it creates economic value in the terms of these are big infrastructure projects. So it creates more construction jobs, permanent jobs, and then an increased tax base. So for us, it was a very easy transition. It was very easy to build business case. Going out to the broader world of large corporates, publicly traded corporates, that is a much longer and slower process because the bigger the institution and they are focused on their core products, and it's hard you don't want to get distracted by something ancillary. And I think that renewable energy has become much more mainstream, but it's taken time. And as we work with investors and developers and constituents, there is often a fairly long learning period to figure out exactly what this is and why it makes good business sense. You can't just sell these based on the environmental impacts alone. This industry has grown up because it has to make good business sense too. And that's really where it needed the catalyst of the tax credits early on. And frankly, still does need them as we still ramp up. But that's really what that tax credit catalyst allowed, was a ramp up in development to help educate and further build the cycle.
And you mentioned a couple of keywords that stuck out to me. The first one was the community side of things. So as we can appreciate, these are probably smaller businesses. And once you actually start talking to the more commercial or the industrial side of the coin, those guys are typically larger companies, more risk averse, right? So how different is the discussion between the two? How easy or hard it is to build a business case for the smaller guys versus the big corporates?
I mean, if you're talking about investors investing in these projects, it's really hard to differentiate between small investors and large investors, because the reality is it comes to relative size of the balance sheet that they're willing to commit. And so the big guys have much bigger balance sheets, so their investment may have more zeros on the end. But for the smaller investors, they're still acutely aware of every dollar they put out. And they need to make sure, they potentially even more so need to make sure that those dollars are being invested in a prudent manner, and that the counterparties they're investing in are qualified, they have good track records, they're competent, and they're going to be around for the entire investment period. The same concerns are on both sides of the equation. So it's very hard for me to say that one is easier or harder to sell, for lack of a better term, to sell or convince. It's just a different process, and it's a different scale. So, you could be selling $100 million transactions, or you could be selling $5 million transactions, but to the relative buyer, there's not material difference.
Yeah, I was thinking about it a little bit differently from the get-go, because typically, the larger the company is, the more bets they can afford to take. So They can go a little bit wilder as well, but typically the decision making is a little bit slower as well. And in terms of the renewables, which part of the industry are you most active in? Is it solar? Is it wind? Is it hydrogen? What would you say is kind of the predominant source of energy that you focus on?
For us, it's historically been predominantly solar. We've also done battery deals. We've done some wind transactions and even a hydroelectric dam. But the vast majority of our projects have been solar. And we've ranged from rooftop residential, the smallest ones on individual residences, up to the largest utility scale projects and kind of everything in between.
Wow. And I guess those are also typically different buying personas, right? Although in the US, it's quite easy to reach scale even on the residential side. It's a very different type of project than when we are talking about a big CNI group of companies or schools, for example. Or if you dive into the utility scale of the solar projects, how has it changed in the last 2 years? Because I see it really heating up, and the feedback I am getting on this pod is that the most important keyword this year is batteries. So everybody's focused on batteries, and finally people start to zoom out and try to look at the whole picture. So we shouldn't be focusing on building solar projects, but we should rather be focusing on building end-to-end energy solutions. So we should also think about how it's going to plug into the grid, and also the batteries are going to be stabilizing that grid. So what's your take and what's your experience on that?
Absolutely. I'd say over the past several years, the consistent theme is that projects continue to get big. 5 years ago, a 50 megawatt project was huge. And now, I mean, we financed one a year or so ago. It was 600 megawatts, and they continue to get bigger and bigger and bigger. To your point on batteries and end-to-end solutions, all of this is critical. One of the challenges that renewables has is that solar is generating during the day, wind generates when the wind's blowing, but neither of these are baseload power. And so to your point, batteries are becoming a much bigger deal because they give a synthetic baseload. They allow you to charge up when the sun is shining and store it and use it when maybe later, like at night when we need it, or when people get home or they come home from work, or they wake up in the morning. And so it gives much more flexibility around those projects. I think the other theme and this wouldn't have even been the case 2 years ago, but with the rapid adoption of data centers and now AI, and there is a distinct difference between AI dense data centers and traditional data centers. But with both of them ramping up materially, I mean, some of these data centers can use as much power as hundreds of thousands of households by themselves. So it's not just a question of where is this power coming from. Ultimately, we are now in a very interesting time in our utility and grid development where we just simply can't get enough power. It doesn't really matter where the power comes from, but the big data center operators and the big AI operators, they are so hungry for power. They want to get it from wherever they can. And the reality is that based on the current supply chains, technological availability, permitting processes, over the past several years, renewables has been the only place you could get that power. And so I know of some big data centers where they're going 24 power for renewables. They want to scale their solar site big enough and have batteries and wind with it so that they have a backup connection to the grid. But a lot of the grids, they can't handle increases in load that big. The supply chain for natural gas is at least 5 years out. You can't build them fast enough. Nuclear, great idea. And I think that has a real future, but talk to me again in a decade because it's just going to take a long time to get there. So renewables, even with today's current policy in Washington, renewables is still the only source of power, the only material source of power that we're going to have over the next, call it 5 years. And I think what most people don't realize is 90% of new generation last year came from renewables. So of all power plants that came online last year, 90% was renewables. And even further, if you look at the interconnection queues, so all the projects who have applied to the grid and to the utilities to turn on, over 90% of those are renewables. And so if you said we're not using renewables anymore, then there's just no way to get out. The oldest plants are still coming offline. They're not economical, and we have to get power somehow. And so renewables is our answer, at least for the short term.
Wow, I don't know what to jump on. You mentioned so many trigger words to me personally. One of my favorite topics is the AI one, and the AI question closely ties into geopolitics as well, right? Because right now the US has the chips and China has the power. And if this flips, which China will acquire those chips in a couple of years, months, whatever the case might be, then it's going to be quite challenging. I don't know if you saw this graph that the US has been generating somewhere along the lines of 4 terawatts of energy in the last 10 years, and China has been generating 10 right now. So it's going to be quite tricky to scale the AI thing, part of the economy, the whole society, without having access to power. And you mentioned a couple of key timelines there. First about the nuclear, which takes 7 to 10 years to go online, as opposed to a standard solar project. I just read it last week. It takes around 17 to 18 months. So it's a huge difference. So I think we should actually forget about the sustainable side of things, and we should purely focus on the business, because the business metrics purely point to the fact that solar and renewables actually just make much more economic sense.
They do. Yeah, you hit the nail on the head. I heard a very interesting quote not too long ago, and I don't actually remember who said it, so bear with me on that one, but it's who wins the energy wars wins the AI wars. And it is exactly that. We need the power to do this, and the amount of energy that AI takes, I mean, it's 10 times, an AI search takes up 10 times as much energy as a standard Google search or regular internet search. It's just more and more. And with AI becoming a part of everybody's day job, seemingly, like I think most office jobs are starting to see it. And even, companies are integrating AI. I've even seen California is now, they just implemented or are in the process of implementing a new AI system to help run their grid, because there's so much data that is needed, right? So AI is just going to explode. And if we're going to keep up, we have to generate more power. And that chart that you're referring to, the interesting thing about it is the US has been flat in terms of power generation for, call it 20 years. We have not allowed ourselves to build up to a point where we are rapidly expanding our power generation because we haven't needed to. Everything's gotten more efficient. The LED light bulbs, computers, washing machines, industrial manufacturing, all of it has gotten more more energy efficient. So we haven't needed more power despite our population growth. That is changing now and changing very fast. So, we need power from wherever we can get it. Like you said, it's not about where it comes from. We need oil and gas. The fossil fuels are not going anywhere. We need them. We need to continue to ramp them up. But renewables are the only thing that's deployable in the short term. So we need as much of that as we can get to help get us to win the AI war.
Yeah, and I'm monitoring, the whole solar production and consumption charts pretty much globally, but of course I keep an eye on the US. And was it last year or the year before that Texas actually installed way more solar and renewables than California? And so my point being here is that we don't need to tie this to political parties or different thought processes, but we should purely focus on the business side of things. It makes financial sense, and basically the key message for most people is the packaging. We need energy solutions. It doesn't need to be 100% pure energy or renewable energy. Of course, it's nicer to have, but the economics actually just make much more sense than traditional ones.
And I mean, the sun is going to shine every day. It is a free source of power that we should take advantage of. So we don't need to pick the winners and losers. It's there. It's free. It's abundant. Let's use it. The wind is abundant. Let's use it. And that's really the message. We need to get it all. Let's look at the economics of it in the business case board. And yeah, Texas is the US's largest energy producer, largest in oil and gas and largest in wind and solar. And it just makes good business sense to have a diverse mix. And frankly, the states, Texas included, but the states that have been big in renewables have also been able to keep their power prices the lowest because the economics make sense. And once you get these things built, the operating costs are the lowest of every other power generation source we have out there.
Indeed. And maybe let's talk about the elephant in the room. We have a new president in the office. We have some changes with regards to the IRA and other renewable programs as well. Do you know any interesting caveats, any type of perceptions from the market? How do the industry as a whole and perhaps your business is affected? And if it is, what is the kind of thoughts or chatter through the grapevine?
There's a lot of it. The recent bill that was passed has created a lot of challenges for the industry. As you know, it really is deprioritizing or trying to stop the use of renewables outright in favor of continued exploration and utilization of fossil fuels. And the biggest challenge here is that it really comes down to policy and policy certainty. What all infrastructure projects need is policy certainty. IRA gave us tremendous policy certainty, and whether every aspect of IRA was correct is a whole nother topic. And I can argue all day long why it wasn't. There were problems that needed to be cleaned up. I will grant you that. But it gave policy certainty out into the early 20s and even beyond. And what that allowed the economy to do in general is to build up more of this renewable energy deployment, but not just the projects. It also allowed for massive spending in supply chain buildouts. The number of module manufacturers that have started operations in the US because of IRA is it's exploded, right? It's grown exponentially. The number of battery manufacturers that are now trying to do it in battery plants that are in the US has continued to expand. All its tens or hundreds of thousands of jobs, plus billions of dollars in investment that were all catalyzed by 7 years of certainty under the IRA. So what the recent bill has done, pulling it all back and unwinding that, creates a lot of concern for the industry. And I was recently speaking to an oil and gas company that, frankly, they are very concerned about the pullback on renewables because of the fear that the next administration might pull back on fossil fuels. And so if we get into this overly partisan fight like this, that ping pong ball bouncing back and forth eliminates all policy stability for everybody. We need more fossil fuel. We need more renewable. If we say we can't have any of this, then what's to say that the next administration doesn't say, oh, sorry, we're turning that one back up and we're turning off fossils, right? And I think that was one of the problems with Inflation Reduction Act, is it did go a little too far away from fossil fuels, but we're hitting back. The current legislation hits back and hits back harder. And so I worry of where this goes on a go-forward basis. That being said, the momentum for renewables is massive. We are going to continue to see development. Projects will continue to get built because, as I said earlier, they're the only generation technology that can be built in the near term. What the unfortunate reality of it is, yes, they will still get built, but without the tax credits, the cost of the energy that these projects are selling is going to be a lot higher. So I don't know what the future holds in generally, but what I am very confident in is that energy prices for everyone is going to go up. Availability of power is going to go down. There was a blackout in New Orleans less than 2 months ago because during the big heat wave, there's a lot of air conditioning need up in the central Midwest. So the grid operator told the utility in New Orleans to shut off power to 100,000 people for several hours in a hot summer afternoon. And there's going to be more of that, right? Outages happen all over the country all the time. If we don't continue to get power on the grid, there will be more of them. And ultimately, renewables will still get built, but it's going to be more expensive and consumers are going to feel it. Once that starts happening, will we revert back? Will we try and, will we shift our policy? I don't know. But in the near term, the only thing that I can say is there's still momentum. We're going to continue to move forward. There's uncertainty around how we're going to finance it, but the variable that will inevitably move is price.
Let's hope that ping pong ball won't turn into a wrecking ball. And as you said, it's also not productive or conducive for anyone, for the next administration, to push back to the other direction, because then we will have two huge swings, and that's bad for business, bad for the economy, and bad for stability and consumers as a whole. And maybe coming back to the AI point, I love to play the devil's advocate. And when it comes to AI, I often say and hear that, especially on the residential scale, you better put some solar on your roof. You better have some storage, because if push comes to shove and AI will be able to outbid you in the energy consumption side of things, you might be left quite hot in a hot summer day.
Can I put this into ChatGPT and see what it tells me? So
Let's try.
Yeah. AI is a big one. It's replacing a lot, right? There will be displacements from some jobs but there will also be massive efficiencies gained. And we've started to see it in our company where some of the efficiencies gained even just process efficiencies, not necessarily decision making, but just helping sort through things. It's incredibly beneficial and it's going to continue to grow. Will we get to a point where I'm worried AI is going to, outbid me and decide that, that it's going to turn off power in my house? I don't know. We'll see. But it's certainly going to continue to grow. It'll be interesting to see what it looks like a decade from now.
Yeah, for sure. And I mean, I like to throw up these questions because it makes people think, and it is a possibility, and never say never. But also, hopefully, we will be protected by some regulation that's going to be protecting consumers, etc. But regardless, it still rolls back to the same point that we need as much energy as possible, grid that's as distributed as possible, which is going to be ultimately much more stable. And you mentioned the New Orleans blackout. We just had something similar in Spain and Portugal last month, the month before, and for a little bit of a different reason, that we had too much solar produced, and basically the grid wasn't able to absorb it. Very long story short. And basically then you saw two knock-on effects from the Spanish and the Portuguese government side. The Spanish government, they started blaming. The Portuguese government started to put in measures and supportive measures to stabilize the grid and be prepared for situations like this. And there you see the clear, two sides of the coin, whereby it really depends on how the country or the state particularly approaches these kind of questions, and we shall see what's going to be more productive for the citizens of that country.
Yeah, I think that what happened in Spain and Portugal is an unfortunate byproduct, and what it really highlights is going back to the very first question: where do we need more? It's batteries and momentum, because without getting too technical, the grids are they operate within such finite boundaries. And so any fluctuations there have the safety measures cause them to trip. And so when it trips, generation goes off. And with solar and wind, right, there is no momentum. And so that's a term in the industry, and turbines and hydroelectric, they have momentum because they're spinning. And so even if you stop generation right now, they continue to spin a little bit. When a solar panel stops producing, it just stops, right? It goes all zero, to zero. Whereas the turbines will continue to spin. So there's a lot of ways you could fix that. You can fix that with batteries. You can fix that with inline turbines. So you can put some rotational forces between the solar system and the grid. And I think it is really unfortunate that it happened, but also it's a great learning opportunity. The power is still good, right? The electrons are still needed. We need that generation. The question is just, how do we safeguard the grid to make sure that we don't have ripple effects like that? And I think there's a number of really easy solutions, easy air quotes, where we can fix this without saying solar is bad, we need to get rid of solar, because that's not the answer. That's too short-sighted, and we can fix it with an easy Band-Aid rather than, pulling out a sledgehammer and taking all the panels off.
For sure. And I mean, the general feeling and the conditions of Europe are also changing with regards to this. You just saw the first data in the last, I think, 10 years that this year we will actually be installing less solar than last year. So that's also quite crazy, partially because of the high interest rates, etc. But it's still 90+% of all new generation. So it is a very interesting statistic, and it is. I have had trouble figuring out what's the best read out of that data point. Yeah, I mean, we can reflect on it that we've been too good in the last 5 years, because it's been 30-40% compound annual growth rate. So that was nice. But at the same time, if you look at China, then the rest of the world is really light years behind. And I think we really need to get our ducks in line, and we really need to start building as fast as possible, as much as possible, because the latest data that just came out, China apparently put in 200 this year. We are really being left in the dark, and you can clearly see that it will have some transformative effects, both to the economy and also ecosystem as a whole.
Right. And look, I mean, it's hard for me to dwell too much on what China is doing. They have a massive economy, they have a massive population, but what's telling is their shift from fossils. And when they really started their industrial revolution, if you will, for lack of a better term, it was really heavily reliant on coal, and they're really transitioning to renewables incredibly quickly. And I'd say that so is the rest of the world. You look at a lot of the European countries, a lot of the, South Pacific countries, and Australia and the Southeast Asia, and even some African countries a little bit to a lesser extent there, right? Everybody is embracing renewables. And they are saying, we want to get to net zero standards or net whatever standards, right? Everybody is doing this. And the public policy almost universally throughout the globe, regardless of political party or whatever they are doing, is saying this is good for our economy. This is good for planet. This is good for everything. So the US is a little bit of an anomaly right now where, our Washington leaders are saying, no, we're not going to incentivize this. Whereas the rest of the world is saying we need as much of it as we can. And so the challenge is, yes, I think we will fall behind because I think a lot of capital providers that are out there want to follow. They see the business case. They see the value of this. And so if we're not building it, they're going to follow the projects. And so capital will leave the US to go into these other economies to help build up their infrastructures because they're supporting it. If we're not going to, we are, as you said, we're going to get left behind. And that's going to hit us, in economic development and infrastructure spending, in our AI race. And eventually, you're right, we are not going to be the sole source for the high-end semiconductors. People will figure out, other countries will figure out how to do this. And China is definitely racing ahead. They're the biggest fear in that one and the most likely to get there first. So, we need everything. We can't be pulling back right now.
The number one priority for them for sure. And actually, when you mentioned the IRA as well, up until probably last year, we've seen a similar project or a similar knock-on effect happening in Europe, right? That many manufacturers actually moved to the US because of the IRA. So as you mentioned, it did create jobs. And I have personally spoken to many module manufacturers from Germany, Switzerland, and they just said that although Europe has the money and the funds available, we just make it so hard for companies to actually get to the money that it really slows them down and it kind of negates all the positive effects for them and for their business. So that's why they actually shifted to the US and set up base there, So what's your take on that?
It's very true, right? The policy stability and the ability to take advantage and realize returns from projects is really a driver. So bureaucracy and permitting and all the red tape that gets involved in projects is very harmful to getting them built. Now, a lot of times there's good reasons to have some of these checks in place to slow processes down. But I was talking to one module manufacturer that is building a plant in the US. They also have plants in China. So what they said is they can build a plant from start to finish in China in 3 months. And it takes a year to build it here. And also in China, it will be built in an area where the supply chain for everything they need for the entire thing is all in one geographic area, right? China has been very smart about building supply chains around certain technologies to make it as efficient as possible, to keep costs as low as they can. And all of the necessary talent is in one area. We don't have that in the US, right? It's much more scattered. So we're building plants where we can find the land and get good local support and incentives and whatever else we can get. But the supply chain is diverse throughout the US. European countries have similar problems. And you've got, instead of just state lines, now you have country borders. And so the EU has a lot of benefits and cross-border protections, but you still, ultimately, it's bureaucracy and policy certainty that gets in the way of infrastructure. And what we're talking about now is the need to build it all as fast as possible. And that needs policy support and clear line of sight to how to get from A to B. And I think we've done a good job to some extent. We do need to cut some of the red tape, and we can do that while still maintaining a lot of the core protections that are there. But ultimately, I think one problem in the US is we have gotten a bit too litigious, and it's too easy for squeaky wheel opponents to stop projects, even if they are ultimately very good for the entire stakeholder. But that's a whole separate topic.
Yeah, I mean, I'm hoping for the best. But speaking of projects and good versus bad projects, can you give us and the audience an insight on how do you determine whether a project is good for you guys or it would be something that you should rather stay off?
There are a ton of variables that go into the projects. Ultimately, because of our structure, we are investing on behalf of institutional investors. We are managing their money on their behalf. And so we need to, as a number one concern, make sure that the investments we're making are expected to create the results that they're supposed to. Advantage is different than most of our competitors in that we backweight almost the entirety of our compensation. So realistically, we are not making the determination about a good project until after we've exited it. If a project doesn't do what it's supposed to, we don't get paid. And so we're putting our money where our mouth is on these investments, which I think is a great differentiator between us and others. And it has really helped us as we go to market and try and convince corporates that they should invest in this, or other investors that they should invest in this space, being able to say to them, we are economically aligned with you. And if this doesn't go well, we're not going to get paid. That goes a long way. So we're taking that off to the side. When we're looking at projects, it really comes down to the fundamentals of the projects. And I know that sounds a little cliche. Having good developers that have track records, using the right equipment, and getting the right third parties to review them, the value of independent engineers to go out and make sure that we've got our I's dotted and T's crossed. Those structural fundamentals are key. We're also looking at what is the project doing for its community? Where is the power going? How is it being used? We've got, what is the economic impact to the local community? And some of our projects have massive local impacts. Some of them we've done some rooftop residential projects, looking at those projects and understanding the value that they're creating to their constituents. Because ultimately, it's not just about this one asset, this one time. Is this going to be around? Is this a viable business? Is it a viable company? Are these viable projects? And if we aren't doing good projects, then that's going to cause problems and the whole industry is going to struggle, which is going to cause problems even for the good projects. But if we're always keeping our eye out to make sure we're doing good projects beget good projects beget good projects. And so, our goal is to make sure that what we're financing are sustainable quality developments that are beneficial for all the stakeholders involved.
And what would be some of the most common mistakes that you see in the industry?
Overestimating how fast you can build one.
Fair point.
Something always happens. So I think that's the most common mistake. There's always delays, supply chain delays, permitting delays, weather delays, stuff happens. The advice I usually give is to, be a little bit more conservative in your timelines. The next most common issue that I see is just being a little bit aggressive on how much it's actually going to produce. Think of it like the miles per gallon, right? What's the fuel efficiency of your car? The sticker gives you a number when you go to the dealer. Are you ever actually going to get that sticker number on average? Probably not, right? Those are ideal conditions as for the testing. Similar thing with energy generation projects, whether it's solar or wind or other, it's really easy, and even batteries, right? It's really easy to look at the deployment trend over a year in the past and say, oh, well, if I just do this and this, I can match that exactly. That doesn't really work, right? The hindsight's 2020, the future is not. And so the biggest mistake is not being cautious enough or adding enough cushion in projections such that you end up being disappointed with the results, even though it might be very good results. If it's not as high as you thought, that can create some problems if you're financing based on faulty expectations. So those are, I think, the two biggest issues that we see.
Yeah, and I can only echo that. In my past life, I was working with EPCs and on the actual design side of things. So I used to work with a lot of them, selling tools to them, software tools to design their projects. And of course, there are too many variables for them to manage as well at the same time. And they are also trying to winning the project, but also delivering the project in the right quality. These are the two most important levers, right? Because otherwise you can overpromise and underdeliver, and then you get penalized for not delivering what you're supposed to.
Yeah, and they're big projects. I mean, as with any contractors and big infrastructure projects, the margin for error is pretty small. And if you have big problems at one project, you usually have big problems at your whole company. So it is a very fine line that both developers and EPCs need to walk to make sure that they're being realistic enough and have the appropriate level of realism, not too aggressive, not too conservative, to toe that line and get to the right end result.
And speaking of EPCs and project developers, how do you guys help them put those projects out and making sure that those are realized as fast as possible?
So with advantages, with where we sit in the capital stack, we are monetizing the federal tax credits. predominant. It's the majority of what we're doing. So we tend to get involved fairly late in the process. So as the projects are approaching notice to proceed, that's typically when we get involved. So at that point, a lot of that diligence has already been done. But they haven't started the majority of the construction efforts. Sometimes they've often ordered some of the core equipment, but they haven't put together the full financing package and started construction. So where we come into play, us and the construction and permanent lenders enter the discussions at about the same time, with the objective being to let's all get comfortable that this project is what we think it is and will generate the returns and the energy and everything that it's supposed to. And once we agree on that, we're providing the capital certainty so that the developers can go ahead, order all the equipment, sign the EPC agreement, engage the construction crews, and actually start putting shovels in the ground. And so then they have that confidence to know that by the time the project's built, or even as they're going in to build it, they have all the dollars they need to build it. So that they're not, because otherwise these projects are way too big for really any developer to build on balance sheet. And that's a little unfair. Some of the largest entities out there, they are able to do that, but the vast majority are not able to do it completely on their own.
Yeah, they are quite capex intensive, and you guys are actually doing it the smart way that by the time you actually get involved in the project, most of the risk have been mitigated, right? There are still some things coming up, but it's more about actually helping them get access to the right source of tools and funding so they can realize that projects as fast as possible, right?
Yeah, that's right. Most of the risks are mitigated, certainly not all of them. We've definitely had our fair share of issues with local permitting issues and other development level, typically development level risks that come up later in the game that we've got to navigate through. But yes, it is a little bit later.
And prior to the show, we actually talked a little bit about your financing platform. Can you speak to that a little bit more?
Sure. So as I just mentioned, we are predominantly financing or monetizing the federal tax credits. So within renewable energy projects, there's two main sources of tax credits that have historically been available. And we're going to leave the new bill off the table for a second, but just going back, starting in the early 90s, production tax credits were authorized as part of the Energy Policy Act of 92 by the first George Bush. So the production credits were put in place as a means to say, okay, if you build these projects, this is predominantly for wind, but if you build the projects, this PTC, this production credit, will be there to ensure that you have a revenue source for your project. It's giving you the policy certainty and some revenue stability and certainty for the projects that allow the wind industry to grow up. And so within the wind projects and the PTC transactions that we've done, we'll look at those projects and say, okay, the project is expected to generate X number of megawatt hours per year. We're going to buy the production credits for that project. And so we will commit to you that as though that production occurs and as those credits are generated, we will take them at a given. So that's how we're financing it on the PTC side. That's what our pair of wind deals have been. On the investment tax credit, that's a completely different tax credit. As the name implies, it's based on the amount of capital you invested to build a project. So it's an upfront credit that happens when you turn the plant on. So it costs you $100 to build. A 30% credit means you get $30 that it's not that simple. The IRS doesn't give you a check. So we are involved in it's structuring complicated partnerships. So effectively what happens is that when this project turns on, Advantage and our investors own 99% of it. And that's so that we can take advantage of the federal tax credit that comes through. And so that investment tax credit allows us to own the project during the compliance period. We take the tax credit. We do take some, and we are able to monetize some of the depreciation benefits. And so the financing structure that we're putting in place for that is really intended to provide that capital security for the upfront capital stack. Whereas the PTC is an ongoing stream. That may be a 10-year stream of credits. And so we're giving them a 10-year commitment that we will buy this so they can leverage that up front. So a couple different methodologies to do it. With Inflation Reduction Act, there's transferability now, so we can just sell the credits. So we're involved in that as well. But ultimately, our platform is designed to help developers monetize their federal tax credits with an institutional entity that is able to take advantage of those credits.
So let me just reiterate and make sure that I understood what you explained. So on one hand, you actually help people with the upfront costs. So basically you're helping them with the capex essentially. And on the other hand, you help companies also optimize their cash flow with their day-to-day operation over a longer period of time. Would that be correct to say?
That's largely correct. And the only caveat is that on the PTC, the developers, the project owner is typically taking our commitment to buy those credits over time, and they will go get a loan against that. They will leverage that to help with the upfront capital stack. So both of them do provide some upfront support, but there's very different mechanics for how we can accomplish those goals.
For sure. And we will also link to the platform in the show notes below. And Tom, if you had an ask for the audience, who should be reaching out to you or Advantage? What type of people would you like to have discussions with?
Yeah, we always want to talk with developers who are building quality projects and also with institutional investors who are looking to get into this space, who don't understand it. Advantage provides a full suite of services for our investors. We'll do everything from deal origination, diligence, execution, asset management through exit, right? And I mentioned before, we don't get paid till the end. So if for investors who are looking to try and enter the space that want a partner that they know is financially aligned with them, those are the investors who we have been most successful with. But also, like I said, we're always on the hunt for developers with good projects. Solar has been our bread and butter historically, but we are getting much deeper into batteries. We're looking at a geothermal deal right now. We're looking, all of it. As we say, we need all the generation we can get. If there's a federal tax credit to be monetized as part of it, we should be talking.
And are you guys purely US focused, or do you also do any projects overseas?
No, we are purely US focused.
Okay, so that's also an important note for the audience as well. Only reach out if you do projects in the US. And lastly but not least, what would be the best way to reach out either to yourself or Advantage?
You can get to both via our website at www.advantagecap.com. And I'm sure we'll put that in here, but on the website, you can get to our Renewables platform, which will direct to me, but you can also get to our affordable housing or job creation business lines. Some details there, but it does have the direct connections, which will put you in touch with me.
Excellent. So Tom, thank you very much for sharing your knowledge. I think we've covered a lot of ground. I can't wait to do this again. And we will link to all of those in the show notes below. Looking forward to speaking to you soon.
Thank you very much for having me, Peter. It was a great time, and I look forward to the next one.